This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hey everyone, welcome back to a brand new episode of the Smart Property Investment Show. I'm Grace Ormsby and I'm super happy to be bringing a brand new investor story to wherever you're listening to this podcast from today. I can guarantee it's going to be a great one. Someone sharing their tips, tricks, insights to their own property portfolio. Maxim, welcome to the show and thank you so much for taking the time.
Thank you, Grace. Great to be on your show.
Max, before we get into anything else, can you talk us through at a really, really basic level? We're going to unpack it all later in the episode, but What are the bones of your portfolio at this point in time?
Yeah, sure. So at the moment, my wife and I, we've got on the Lower North Shore, we've got two, houses on the Lower North Shore. We've got something out in West, which is a house as well as a granny flat. And we're starting a project in Adelaide, which has just been approved for 3 townhouses. And we also partly own a duplex as well in Maitland near Newcastle.
There you go. So what was it that sort of got you interested in property in the first place? And how long ago did you sort of start thinking property might not be a bad idea?
Yeah, that's a great question. I actually studied architecture in university and partway through my architecture course, because it was split through into 2 degrees, I realized that I didn't really want to be an architect, but I really enjoyed, developing small projects, renovations, adding value to a property and seeing the income come in as well. I've always wanted, the freedom to choose, how many days I work. And that's always been the goal to kind of, work less and less, over time as the portfolio grows.
A pretty good goal there, Max. So I know you don't work in architecture now. Whereabouts have you landed? What do you do for work?
Sure. I guess I work in a related industry. I build software for, real estate agents. I'm a product manager, which means that I go out and talk to a lot of real estate agents and property managers and work out their problems and how they work. And then I work with a team that actually builds software for these people. Yeah.
Must give you some pretty unique insights into the space. I'm guessing some of the people that you get to talk to about, the things that you're even doing with your own property portfolio.
Yes, definitely. I mean, it's great to have a job which also, overlaps with a passion. So what I've found is working in this industry, there's just so many go-getters in the real estate world, people who work extremely hard and get very good results, but it's through a lot of persistence. And I think that also applies to the investing journey or the property development journey, which I'm on now. It requires a lot of persistence and there's a lot of ups and downs, but I've always got, inspiring role models in the people I talk to in my daily job.
For sure. So going back to that architecture degree and the fact that it doesn't really, you probably don't draw on it all too much day to day. Is that fair to assume?
Yeah, that's right. When in building the software and designing software I do, it doesn't require a lot of, in terms of the architecture, although there's a lot of parallels between designing a build structure and designing software,
Interesting.
Yeah, except when you build something, it's less forgiving than with software. You can go and fix bugs, but it's very, very hard if you make a mistake on a built product.
Absolutely. So then that brings me sort of to my next question, which is around how much that architecture degree actually helps you with, your passion projects and the fact that you are a property investor yourself.
Yeah, I'd say quite a lot because it's trained me to see things differently. So, for example, there's a lot of investors that will just get a granny flat approved and just plonk it onto a piece of land because they can. But I'm always thinking of the persona that I'm designing this for, making sure that who's going to buy this property in the future when I trade it on, is it going to be a small family with 1 kid? Is it going to be an extended family? What's in demand in the area? And I try and build something that fits in with the kind of the ethos of the original house, so that it's at least, it doesn't look like it's just been transplanted from another planet onto the site.
Does that increase the costs astronomically, or do you think that, that extra investment that you'd be having to put in there pays off?
Yeah, look, it's a really good question. It does increase the cost a little bit. For example, the most recent one I did on Lower North Shore was a granny flat, really good suburb, and I put a granny flat on the back, but I made sure that it really fit in with the house, which was more of a Hampton style property. It had the granny flat was a kind of a modern Hamptons look. It has raked ceilings, extremely good light that comes in, and it paid off in the sense that it fetches $600 a week in rent for a 2-bedroom, 60 square meter granny flat. And when we had it appraised recently, it's, $750 was attainable according to a property manager we spoke to. So I think people are willing to pay a little bit more for a really good design and something that's really feels like, a little bit of a more premium product.
There you go. I mean, this episode could really be all about granny flats itself, because we're going to keep talking about that in a little while, but I have gotten a little bit ahead of myself here, Max. And I want to go back a little bit in time. Can we talk through your first property purchase and what that was, and, how getting on the property ladder for the first time actually went for you?
Sure. Yeah, I learned quite a few lessons in the first 4 properties I bought. So I actually bought initially in New Zealand. Yeah, so I was part of the, I guess some Australians bought in New Zealand during that time. I bought in towns like Howrah, Dunedin, and what happened was some of these were student accommodation. I found it extremely challenging. I had to take some tenants to tribunal. Actually, it was a really good experience in some ways, but in the end, I probably stole those properties for what I put into them initially when I look at it. Yeah.
How long ago was that, if you don't mind me asking?
Sure. That was in the early 2000s. So around 2005, 2006.
Mm-hmm.
Yeah.
So even though it wasn't the best experience necessarily, it didn't put you off investing in property further?
I took a bit of a break after that. So for a while, I thought maybe my luck is not here in property. I had that period of, doubt, as you do sometimes when you put a lot of effort into a project and it hasn't panned out as well as you expected. But, then I guess I gathered everything up again and I had another go. Yeah.
Well, we might take a break there, because I think that's probably the perfect place to pick back up on the other side of this break. See you then. Welcome back to this episode of the Smart Property Investment Show. I'm joined by Max Sim. Max, just before the break, you were talking about your first property purchases in New Zealand and how they didn't really pan out, but you obviously had another crack at it. It didn't completely put you off, and you've since and subsequently ventured into the Australian property markets, and I'm assuming to far greater success than that first time around. What was it that made you go, actually, it's still worthwhile me having a go here?
Sure. Yeah, that's a good question. I was lucky enough early in my career to work for realestate.com, and they sent me overseas, and I was working in Hong Kong in a regional role for a couple of years. And actually during that time, my wife got pregnant, and, as you do, you start thinking of creating a nest. So that's what I did. I came back to Australia, bought a property. It was our first property, and it's basically a semi in the Lower North Shore. And that's where, I guess I wanted to set up for a family.
So, I mean, as simple as that, really. You weren't thinking then, you were thinking nesting, but you weren't thinking property portfolio, necessarily returns on investment or anything like that?
Yeah, I guess not really. I was thinking of nesting, and there was a sense though of, always looking out for something with potential to develop on. So I always had an eye as to what can I do with that property, rather than just buy a property that looks good and is fit for purpose in the time that I purchase it. I'm trying to look at a few years down the track, what could I do? So that was behind, my first choice, I guess, in property.
So what year was that, Max?
Sure. That was in 2012.
Mm-hmm. And how much did you fork out for that first purchase?
That first purchase was around 770.
Yeah.
Yeah, so just under 800. Yeah.
And the big question, do you still have that property?
Yes, I've kept that property. Yeah.
So taking a little bit of a different approach then to the New Zealand ones where you did end up offloading them. You've taken a bit more of a buy and hold approach this time around.
That's right. Yeah, yeah. So it's one of those, I guess, that we were lucky and, we bought it a good time. And it's also one of those that it happens to be on a site which, developers are interested in as well. So it's one which we're hoping and praying will one day be purchased as a development site.
Okay. So, buying and holding for now then and just sort of seeing what pans out. Are you still living there or have you moved on from that property?
No, we've moved on from that property.
Yeah. So you're renting it out?
Renting it out, yeah.
And how's that going for you?
Oh, it's going well, actually. It's a property that's really good location. So it's always in demand. I think the most we've had in vacancy in the last, say, if I look back 5 years, probably have 3 weeks vacancy. That was the worst period of vacancy.
Not bad at all.
Yeah. So we've been very lucky there. And, for the most part, it pays for itself.
Mm-hmm. And do you have any idea what that is worth now?
I can only base it on, what I've seen online. So sometimes I go and have a look, and I think the last I looked was about 2.2.
That's pretty good going in 10 years.
Yeah. So we've been very lucky there. Again, it's one of those things, but I guess it's a bit of a cliche, but we timed it right and it was in the right area. So we were very lucky.
So have you drawn on any of that equity to finance any of your other purchases since then?
Yes. Yeah. So we've drawn on the equity. For example, the townhouses that we're looking to build in Adelaide, will be based on some of that equity. When I say we're going to build, actually, I should qualify that we may not actually build. We may actually sell it as house and land package, depending on, what the quotes from the builders come back as and how much risk we want to take with building. Yeah.
Yeah, a fair bit of going. And I want to talk about that as well. But before we do, let's talk through, we've talked about the first purchase. What then spurred on that the second and subsequent purchases really since then? So that was back in 2012. We've got 10 years to still unpack between there and now. So what was next?
Sure. Next was in 2015, we purchased a 2-bedroom on Lower North Shore. It's a kind of a property lovely property, but, it wasn't fit for most people's purpose. Most people were looking for a 3-bedroom and above. It also had a lot of trees, and that puts a lot of people off because, they're concerned about council approval, whether they can actually remove these trees. But I did my research as an architect and I found a lot of these trees were palm trees. So, majority were palm trees, which the council didn't really care about us removing. Mm-hmm. And, we were able to extend it from a 2-bedroom to a 4-bedroom property and also put a 2-bedroom separate dwelling as, granny flat. That's kind of one of the premium granny flat I was talking about before. Yeah.
Wow. So did that become principal place of residence?
Yes. Yeah. It's actually at the moment.
Yeah. How long was it that kind of renovation process took? Were you living in there the whole time, or was it a bit of a project before it became where you did live?
Yeah, that's a great question. I mean, initially we leased it back to the vendors. Mm-hmm. So, and then over time we started the process of looking for builders, and that took a long time. I think I was looking at builders for about 6 to 8 months before I finally signed a building contract. And
why? Why was that? What was that? What was important to you?
It was really important for me to manage risk. So, I'm quite risk averse by nature. So I wanted to have the right clauses. There's something called the liquidated damages clause. So this means that if a building project is delayed, you get some kind of compensation for that delay. And I wanted to make sure that that was a reasonable amount of money. There's often building contracts will have this clause in there, but it's for a very minimal amount of money. So it doesn't really motivate the builder to focus on getting the job done necessarily. And we also wanted to make sure we had a builder that we could communicate with and had built things which, in terms of similar quality to what we were looking for.
You bring up some really great points, Max, around due diligence and the importance of that. A lot of people wouldn't even be thinking about things like that. What was it that drew your attention to making sure that, this process was one you followed and the research that went on behind the scenes for it?
Yeah, sure. I mean, I guess during my time when I was a student of architecture, I spent a lot of time on seeing what could go wrong on building sites. And at the end of the day, your builder relies on a lot of tradespeople. So they're not 100% in control, of the outcomes. So, of course they come to the site, but they're not there every single day of the week. They might be running 7 different projects. So just with that knowledge, I guess, allowed me to think through what could go wrong. Yeah. And even things like before building the granny flat, calling out a ton of agents to make sure that it was the right products, that people actually were looking to rent this, and it wasn't going to be a expensive white elephant sitting in the backyard. Yeah.
And if you don't mind me asking now, how much did you purchase that property for? Because I feel like you probably extracted some pretty good value out of it since then.
Yeah, sure. I mean, this property was, we bought it for 1.39.
Yep.
Yeah. And we probably put in, it's about 500K into the renovation and building the additional dwelling at the back. So in total, that's about 1.9. Which
seems like a lot to be putting into a property, but given the way that the market's going on in Sydney's North Shore, it's a pretty safe gamble, isn't it, to be doing something like that?
Yeah, and I think, because it was a principal place of residence as well, we didn't, I guess, apply the same strict criteria to it that we would for an investment property. So there was, I guess, some of that. But yeah, we've been, again, very lucky in that because it's so near a good school, it's also gone up a lot. Yeah. So what we hear from agents is a lot of people from the eastern suburbs are actually moving to Lower North Shore because it's become unaffordable, for a lot of families as well.
So sitting on something pretty good right there, Max. Beyond that, we've talked through the two properties that you own on the North Shore, but there's other properties still to talk about here. What fueled then the subsequent purchases since then?
Yeah, sure. So I guess I can talk about the property we bought in the West, which was in the one we added the granny flat to. And we just had additional equity and funds because I guess in the regional role overseas, I managed to save and live quite frugally. So when we went there's a place called Rooty Hill in the West, which is there's a famous RSL club, the Rooty Hill RSL. Now has become
that's huge, hasn't it? Yeah, massive.
So we bought in that suburb and, it was a 3-bedroom, added 2-bedroom granny flat there. That was back in around 2018. And about a year after, we looked at putting together with some family members and friends into a duplex project. So this was our first kind of development, I guess. It was a duplex in Maitland, which is a small town just outside of Newcastle.
So how did that go? Having done everything yourself, you and your wife up until then together, being able to make all the decisions. Was it a big step for then you to go in with other people and go, okay, we're going to do this together?
Yeah, I guess it was a little bit of a change, but, I guess I wouldn't say it's easy to do projects with my wife either because she's has extremely high standards in terms of, risk mitigation and.
As she should, Max.
As she should. So she holds me to a very, very high standard.
That due diligence. So it's none of you. It's all coming from her.
Yes, definitely. I'd say it's an 80-20. So 20% from me and 80% from her. So
then, I mean, a bit of an extension of that then going in with other people and.
Yeah.
I mean, I guess as well, it does reduce that upfront cost, I'm imagining, when you're going in with other people.
Yeah. I mean, you'll always, I guess, reach a point where you're either short on serviceability or short on capital to put it in as a deposit. So it's, at some stage, it's about finding the right partners and, whether it be friends, family or people that are in the general community of property investors that want to get together and do projects. Yeah. So that's one we did together. But the Adelaide one, which I mentioned before, is one which we're doing on our own.
Cool. And has that, I mean, we'll come to the Adelaide in just a second, but with that duplex, is it still a buy and hold kind of strategy when you're going in with other people, or is it more about, turnover?
Yeah, it was buy and hold. So it was built in 2019.
Mm-hmm.
And because, of the pandemic, a lot of people moved to Newcastle and Maitland areas. So we're actually quite happy that we held on to it. But I think going forward, it's to put that capital back to work, we'd have to do another project. I think it's probably, in terms of the growth that it's seen, it's probably peaked in terms of that growth. Mm-hmm. So it's about, now we're thinking about how do we recycle that capital, put it to work again in something else.
So you're working with the same people to keep using that money that you've all made off the back of it. Cool. Exactly. So it obviously, it all went well then. It wasn't because you do hear some horror stories, unfortunately, of people going into business with friends or family and it doesn't work. But it's nice to see that it does pay off if you do it properly.
Yes. Yeah, definitely. I mean, again, it's down to a few things like due diligence, and the due diligence, probably the most important piece of due diligence you can have is actually calling and talking to agents about the demand in the area, what's selling, what are people looking to rent. There's a lot of agents very happy to just spend 10, 15 minutes just talking to you on the phone, plus also visiting the area. I remember when we bought the Rudy Hill property, I would hang around and talk to shop owners and say, what's this area like at 7 p.m.? Is it a good place to raise your kids? I get to know the locals. I spent 6 months probably getting that property in Rudy Hill, just going there every single weekend. And the same with Maitland. We went there quite a few times, not every weekend. It's a 2-hour drive, but, it's a similar kind of approach.
Which makes me very curious then how your approach would have had to change when you were looking in Adelaide. But we're going to take a quick break there and we'll talk about that straight on the other side. See you then.
Want to slash thousands off your home loan repayments? Whether you're an investor or homeowner, we know how important it is to find the lender that suits your unique situation and with the best rate. If you've not compared your home or investment loan in the last 12 months, you may be able to cut your repayments today with a different lender. That could mean more money in your bank account and less stress when it comes to paying your loan. Find out why more borrowers are turning to Finny to refinance their home loans. Call us now on 1300 002 023 and find out what you could save, or visit our website finny.com.au to book an appointment.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by investor Max Sim. Max, just before the break, we were talking about the properties in Maitland, the one you purchased in Rudy Hill as well. You've obviously got 2 on the Long and North Shore that are doing very well for you as well. I'm very curious then why you chose Adelaide for a bit of a project, and it's something that you and your wife are taking on. And obviously there must be a lot of potential there for you to be looking a little bit further afield than your local Greater Sydney region.
Yeah, no, it's a good question, because I guess when we ventured to do and went out to do the Maitland project, that was slightly out of Sydney, and Adelaide's quite a way further than that. But I guess I did feel a little bit of affinity with Adelaide. I actually lived there for 6 months in one of my first jobs. So I was
there you go.
Yeah, so I had a bit of familiarity with Adelaide. I also, had looked at the figures in terms of the growth of Adelaide and a lot of the companies going in there, and, talked to people who are working in projects in Adelaide. There's quite a few communities that talk about Adelaide online, so it's about joining those. And so there was a level of comfort with Adelaide.
Yeah, cool. So that would have still looked, I'm assuming that's happened since the onset of the pandemic. Is that right, that you've looked at Adelaide?
Yes, we looked at Adelaide very recently. So that was just it. In fact, the property's just been approved for the townhouses. So looking at that took. So it's probably within the last 6 months that we purchased in Adelaide.
Yeah. What's that process been like? Because it's obviously a little bit different to the first purchases that you've made. They've all been, houses or semis, and then you've gone into this. Basically, it's a development. That's what you're doing.
Yes.
What's that process been like? Has it been markedly different, do you think?
It has been, in the sense that, we were able to go and have a look and have a holiday in Adelaide and get to know some areas. But obviously, it's not something where you can just hop in a car and do a weekend trip out to look at the different properties on sale. So for this one, we actually worked with an agent who's did property acquisition for us.
Mm-hmm.
So, we were looking for something really specific in terms of it had to meet the criteria in terms of what we could, if we wanted to build 3 townhouses, it needed to match that deposit that we had to build those townhouses. It couldn't be one where we'd pay for something where you could put 5 on, but we wouldn't have the capital to put construction of 5 townhouses. So we had quite specific criteria.
So you've almost reverse engineered this process to suit your, you haven't gone in there and you're not going to see costs blowing out or anything, because you've been very particular from the very beginning as to what it needs to look like and how it needs to work.
Yeah, that's right. Exactly. That's right. And, over time, being in investing for a while, I guess I've also assembled a really good team of advisors along the way. So, I can't take credit for everything. And when I do a spreadsheet or to look at things, someone else looks at it for me as well. So it's something that definitely it's worth the extra expense to get somebody to just check or even do an initial feasibility for you. There are companies out there that will do feasibility for you on different sites.
Good to know. So how much did you end up putting down? I mean, was there a house on this land that you purchased to begin with? Has it been a knockdown project? Talk us through what it's actually looked like.
Sure. Well, it's only been 6 months. That means we've got to the stage of council approval for the 3 townhouses. So nothing's been knocked down. It's a property with an existing 3-bedroom on it, which was perfect because we wanted to have income, during that time.
Okay, so it's rented out at the moment.
Yes, yeah, exactly. It's rented out. So
there you go. You've really thought about everything here.
Yeah, I guess you have to, right? With especially with all kinds of things happening in terms of interest rates, and it's all things the thing I guess I love is a good spreadsheet. So I spend sometimes weekends working out scenarios on what happens if this went up, or the cost of this went up. What would that impact in terms of overall? So I'm a bit of a geek, I have to admit, Grace.
I mean, you're not the first person to come on this show and admit they're a geek, but obviously that's what you need to be doing when you've got, you're dealing with your own money. It's not we're not dealing with, hypotheticals or, magic ingredients here. We are literally you are dealing with your own money and growing your own wealth, and you've got to keep an eye on what that's doing when you're doing it. So
yes, absolutely. And sometimes the way I look at it is the first client that I need to keep happy is my partner, because otherwise she may not approve the next project.
Yeah, exactly. So you're accountable. You're staying accountable, Max. We love to see it.
Keeps me up at night. Yeah.
So then with this property, how long till you will start doing the construction on it? And what kind of are you hoping? Will that be another buy and hold situation, or given you're dealing in more a development space, is there some, let's get rid of some of them and get some of that cash flow back? Yeah,
that's a good question. And that's something that we're not sure of right now until we get back some quotes from builders. Mm-hmm. So once we get some quotes from builders, then we can build a spreadsheet with the accountant, and what they can do is really work out different scenarios. So for example, if we did build, what we'd need to put in, we've already spoken to agents, so we know what the townhouses would sell for. But it's about modeling that out. So it may be more attractive not to build and to recycle that capital sooner. So to give you an example, when I say not to build, there might be 2 options. One of them is to sell the site as a DA approved site. The other option would be to do a deal with the builder so that it's sold as house and land packages, which means that the agreement to build is between the purchaser and the builder, and the developer steps back. But at the same time, we still need to make sure that the builder does a good job, because as developer, our name is still on there. So, reputation is really important in this industry as well.
And so this is all in response to the fact that construction costs are rising. Is that right?
Yes, I would say that, this extra step of being extremely careful about the next step is about this construction costs, because we've seen in the media some of the property costs of construction have gone up by double digits, which makes quite a big difference.
So what's next then for you, Max? This sounds like this project would be taking up a fair bit of your time, but there's obviously plenty of options there. And referring back to what you said earlier in this episode about wanting to build up that wealth and maybe one day, take some days off work, be able to be a bit more flexible with that. What is your eventual goals or dreams with creating this property portfolio? And how many more properties do you think will be in the works as a result of that?
Yeah, that's a really good question. I think the metric that I like to think about is how many days do my wife and I not need to work after each project, So how much does a granny flat or a townhouse we're building reduce the need to work and still maintain the same level of lifestyle and, that we've got? So I used to count in number of properties, but I don't anymore. It's more about days of salary replaced.
Yeah. Which is a really cool way to be looking at it, really.
Yeah, because I guess at the end of the day, we're very family oriented and we just want to spend more time together, as a family. So it's about gaining back and buying back that time. Yeah. But I guess the next step for us is really to look at ways that we can, with my architecture background as well, work with people who are on big pieces of land that don't realize that, they're living on a townhouse site, for example. And sometimes it's a matter of, I guess, working and finding the right person to do those kind of what we call owner joint venture deals with. And the reason those are attractive is that in a way, there's a lot less outlay than actually purchasing a site in the traditional sense. Sometimes a property is on a very large block of land. The property itself doesn't have to be demolished, and the two pieces at the back could be subdivided, sold as house and land packages, or they could be constructed on. And it's about, I guess, doing a lot of research, finding the right owners to talk to and about that kind of opportunity. And that's our next experiment, I guess, our next experiment into doing things.
So very much a watch this space kind of thing. That's really, really cool. Good luck with it, Max. It's definitely a different way of property investing that a lot of people wouldn't be very attuned to. So I can't wait to see how it pans out for you. We're going to have to get you back on the show as you continue this journey, because I can tell it's nowhere near over for you. There's plenty more that you still want to be doing. And I can see it's as much a passion thing for you as much as it is about creating that wealth and being able to take those extra days off, because by the sounds of it, you're going to take those days off, but then you're going to be, pushing that back into what you're doing with your property portfolio down the track, which is where you want to be by the sounds of things.
Yes, definitely. I think it's, I'm not a workaholic by any means, but, it's definitely about, as with a lot of people, it's about gaining back that time and having more choice.
Max, it's been so wonderful to chat with you today. Thank you so much for taking the time. And as I've already said, best of luck with it all. Keep us posted. We want to hear how it all pans out for you.
Great. Thanks, Grace. It's great being on the show.
To everyone who is listening along, we hope you have enjoyed this episode. Like or review us on whatever platform that you do listen to podcasts on. If you have any questions, don't hesitate to reach out, editor@smartpropertyinvestment.com.au. Stay up to date with us for all the latest news on our website. Subscribe if you haven't already, and check us out on social media, Facebook, Twitter, and LinkedIn. Until next episode, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
HR Leader is your source of news, insights, and more for HR, leaders, and people managers. Subscribe today at hrleader.com.au.